just wait for your setups. Just wait for your setups and don't change the way how you trade your setups just because you're in the evaluation now and now you have a deadline. Like, for
Hmm.
example, the cycle for my specific strategy extremely slowed down in July. So that was basically the slowest cycle of the whole year for me. And I decided to start in August. So basically at the slowest point of the whole year. But I still knew that I will pass the challenge because I know the expectancy of my strategy if I just stay patient and trade my setups, even if it takes 3 months, if it takes 4 months, if it takes 2 months. So I think this is very important for people who consider the evaluation that you take your time and you trade your setups, no matter if it will take 2 months or 3 months.
To another funded trader of Tradepool. Today with me is Tom, straight from Germany. How are you doing, Tom?
I'm doing very good. And you?
Okay, I'm great. Thanks for coming
Perfect.
to this interview. Today we're gonna talk with Tom about his experience with Tradepool. He just passed the evaluation. He traded on the extra buying power, which means he had $160,000 buying power to trade with, and that's kind of enough, right? I mean, Tom, do you feel you had enough buying power to work with?
Yeah, of course, it was definitely enough, especially in comparison to my own capital. It was a
Okay.
great difference. Yeah.
Yeah, so maybe we'll talk about that in a second. The differences between trading your own capital and trading with Tradepool, basically. Tell me a little bit about your experience in trading. How long you've been doing that?
I've started trading at the beginning of 2022,
Hmm,
so roughly 3 to 4 years now, and I'm trading ever since. Yeah.
nice. And how long did it take you to pass the evaluation?
It took me, I think, 3 to 4 months. Yeah, I think I
Wow.
started at the end of August or September. Yeah, the cycle was not favoring my strategy in that
Hmm.
time of the year, so it took several tries.
Okay, so that's very interesting. We have guys that pass the evaluation within like 7 days or 3 days, 14 days. And you actually and I remember also Mark, one of our funded traders as well. It took him I guess eight months to pass the evaluation. And that's very interesting that you mentioned that as well, because from time to time the market won't fit our strategy, right? The
Yeah,
cycles of the market. So
yeah,
that was amazing. We will look into your account in a second, and just to understand why it took you that many times, I guess. Not many times, 3 4 months, that's great. But comparing to, let's say, guys that pass it very fast, interesting to see the differences there. What do you usually trade? What is your style?
I'm a day trader, but my usual holding time is like 4 to 5 hours. So I
Hmm,
try to trade every single day, and usually when I enter a trade, I hold it throughout the whole intraday open market.
nice. Do you feel like, when trading, maybe let's talk about that. When trading the evaluation, did you do something different comparing to what you did on your personal account?
Yeah, I became way more conservative with my setup selection. So I have different setups in my playbook, and I know the expectancy of these setups, and I try to only use the really the A plus setups. But the problem with that is that they obviously have a lower frequency of occurring,
Yeah,
and yeah. But this was the main change in the evaluation.
nice. Let's look into that. So uh, so this is your account, like I said, $160,000 buying power. The goal was to reach 7,800. You did that. Also 30 days, 30 trades. And this is very interesting to look at because you had a nice move to the upside, like
Yes.
halfway, right from the get-go, and then the big pullback. Tell me a little
Yeah.
bit about that.
Yeah, this was, I think, at the end of September. I got sick, I got COVID, and
Hmm,
I made the bad decision of continuing to trade. I should have rested, but I thought I could still concentrate and focus on trading, which was a mistake, which was wrong. I continued to trade during the time where I was sick, and this heavily influenced my yeah processing power in my brain probably. So I took trades that I
yeah.
would normally not take, And when I was healthy again, I also analyzed this whole period. So the trades that I took, the setups that I took, and if I like broke rules and stuff like that. And I completely deviated from my playbook and my rules in that time without even realizing it. So the better option would be the next time to not trade when you're sick. Yeah.
Yeah, that's for sure. I spoke with one of the guys yesterday that passed the evaluation, and I interviewed Nick, and he told me as well. He had a time you can literally see a very similar chart as he had, because he had a time when there are stuff going on in his personal life that just got him distracted from trading, and he did a lot of bad decisions like in the market. So
Yeah.
definitely a great insight here, just to understand, be aware of the situation. And when you know that you're not 100% in your trading right now or in the zone, definitely take a step back and wait until, COVID will pass or whatever it is, and then get back on the horse. So yeah,
Yeah,
that's
that's
a
good.
that's a good advice here. So after you recovered, you basically started to do the same thing, looking for the setups, the A plus setups, etc.
Yeah, that's
Nice.
true. I resorted to the same stuff that I was doing before COVID. That's true.
So let's talk a little bit about those trades. Easily to see, you're like a small cap trader with short bias. Definitely, I can
Yeah.
maybe see one buy,
Yeah,
one long. The others are shorts. Tell me a little bit about, let's say, one of the trades. What is your process when you're going into looking for that A plus setup?
yeah. So every morning, like around, it's difficult with the time zones, but 30 to 60 minutes before market open in the pre-market, I start my pre-market research. I mainly trade gap ups, so stocks that gap up, like for
Hmm.
example, 50% from the previous day close. So I have my scanners set up for that. Then I look if there are any tickers that meet this criteria. And then I start going into the more in-depth research of the company, the fundamentals of the company. The technical analysis is the most important part for me. So what is the daily chart telling me? And I have a checklist where I have like rules for the tickers that I want to trade. So if they meet the criteria, I put them in the focus list. So my focus list is the list where I really start looking at the tape and where I try to understand how the stock is moving, how much volume is flowing in, and if it's a stock worthy of trading. So then I will look for my entries. And if it's not fitting my criteria and there are certain red flags that occur in the research, then I completely avoid the trade and not look at it.
Yeah.
I usually don't trade in the pre-market. I don't like shorting in the pre-market because of liquidity issues and stuff like that. I wait for the market open. I usually trade around 30 to 40 minutes into the market open. So I'm usually placing my trades right at the market open. And there I have my clear entry rules and risk rules for my setup. So, like I said, I'm mainly a short seller. I look
Yeah.
for dilution in the stocks. So, in the small cap segment that I'm trading in, companies are usually trying to raise money through intraday offerings or offerings in general, which is called
Yeah.
dilution. And this creates overhead supply. And this is my main short thesis for these tickers. So when this overhead supply hits, so when there is a big seller, for example, showing up on the tape, then this will be my thesis for slowly scaling into the trade and usually holding it to the end of the day, because dilution usually results in all day fades, as we call them on Twitter. So stocks that have a small push at the open and then they usually have slowly price decreases into the end of the day. And this is basically my process.
That's great insight, and I love the process that you have. Very, very understandable, I guess, and also, yeah, easy to walk through that, right?
Yes.
Uh, so, because of that, let's dive in just a tiny bit more. Tell me a little bit about. Okay, you found the right asset to trade. This gapper, you went through the news, the technical analysis. You saw the pump, basically, right? It's sort of like a pump and a dump. So
Yeah. That's
You
it.
looked, you found that pump. How do you scale in to the position? What is your process in getting into that trade?
Okay, so I have different approaches for different setups because the way how these tickers trade is usually different based on the float, the market cap, the overall pre-market volume. But my general approach usually is I have daily levels, so I look into the daily chart and I look for daily resistance. And most of the times, these stocks tend to have a push into the open. So we usually have 10 to 15% of a push into the open. And then I look if there are certain resistance areas on the daily chart at this point. So if the stock is pushing, for example, and they're in the open and there is a big resistance area in the daily chart, then I start. I usually have two bullets, so I have two entries till I'm full size. So I usually start once I see rejection on the tape and on the chart, so the candlesticks. I start my first starter, which is usually 50%, and my stop loss is most of the time either at the high of the day, so right at the top of the move, or at
Yeah,
another daily resistance. This usually depends on the structure of the daily chart because
yeah,
sometimes there is no daily resistance above that, then I have to risk the high of the day. Then I usually wait for a rejection. So I have my 50% starter set, I have my stop loss set, and then I wait for more rejection, more confirmation. So I want to see that selling starts to hit on the tape. I want to see that there are bigger red candles, that the selling volume is increasing, so that my overall thesis is right, that there is a big guy selling into the market. And then
yeah,
once I see that, I usually try to get a bounce. So usually they then reject, they sell off, and then we have a bounce where shorts are covering or other longs are trying to buy the dip. And into these bounce, I usually short the remaining 50% of the position. And then I wait for 30 to 60 minutes and see how the tape plays out. So you can usually see in the tape if it's seller focused or long or buyer focused. So if there are more buyers or sellers in the type. And then when I see that, I also use statistics. So in my statistics, then I see that if after, like, for example, 60 minutes, the price is at a certain point, it is very unlikely that it will go past the high of the day again. So then I usually start adding one or two more. I use R's, so 1 R is like
yeah,
my risk. Let's say I risk $100 per trade, then 1 R is $100.
yeah.
So then I start to add maybe 1 R or 2 R depending on the criteria of the ticker. So there are trades that I wait like 4 weeks for that are very infrequent, but where it's worth it to risk, like for example 3 or 4 R, and then I add along the day basically, because like I said, they usually fade the whole day. So all
Yeah.
I'm trying to do is I wait, I stay patient, I wait for bounces, and then I add into these bounces. And since my thesis is that they will fade after that again, I can add. That's basically my scaling process.
And for covering that short you entered, where do you look for the exiting part?
Yes. So basically, like I said, I apply data. So in my data, I know what the average expectancy of such a fade might be. So on average, how much the stock like moves from the high of the day to the low of the day. So this is one layer of my and exit planning. And the other layer of my exit planning is also dilution. So how much dilution does the ticker have? So how much can they dilute? So how big, for example, is the ATM? So the at the market offering. This is
Mhm.
something that I see in the filings then. And what is the daily volume? So if they have massive dilution, for example, I usually hold to the end of the day. So I cover my position 1 minute before the market close because I expect that they're going to sell continuously over the whole day and that there will be no real reclaim of the stock. So I will anticipate that the possible lowest point of the day will be right at the market close. So this is the second layer of my analysis. Then this is where I will cover at the end of the day.
Wow, that's incredible. And guys that just listen to that, I gotta tell you, obviously I've been trading for 16 years and I have hundreds of interviews with funded traders. I can definitely tell you that what Tom just talked about in the last 2 or 3 minutes is gold. Repeat it, listen to that again, focus on that, try to see what you can take from that. That's incredible process, Tom. So I appreciate
Thank
that
you.
sharing. Yeah.
Thank you.
So without being said, with that being said, we can, I think, close this interview. And anything maybe you want to add for the guys that just either sitting on the fence or just started the evaluation? What will be, besides all of what you just talked about, like one advice or two that will get them to the next level and actually pass the evaluation?
Yeah. So one thing that I also mentioned earlier is like it took me 4 months to pass the challenge, and I think this is a very important thing to keep in mind because we have when we start the evaluation, we have a deadline. So we usually have like I think 30 days or 45 days in the first
45.
try, 45 days, and this can create pressure in ourselves, and this can lead to forced trades because, for example, we are at one day before the deadline, and then we start taking trades that we would normally not trade, but we take them because we want to pass the challenge fast. I think this is something that people need to understand, that it's okay to take it's okay if the challenge takes 2 months, 3 months, 4 months. Just wait for your setups, and don't change the way how you trade your setups just because you're in the evaluation now and now you have a deadline. Like, for
Mhm.
example, the cycle for my specific strategy extremely slowed down in July. So that was basically the slowest cycle of the whole year for me. And I decided to start in August. So basically at the slowest point of the whole year. But I still knew that I will pass the challenge because I know the expectancy of my strategy if I just stay patient and trade my setups, even if it takes 3 months, if it takes 4 months, if it takes 2 months. So I think this is very important for people who consider the evaluation, that you take your time and you trade your setups, no matter if it will take 2 months or 3 months. Some months are just slow, and some months are fast. You can't really control it. That's the market.
Yeah, that,
That would
that's a
be the
great
advice. Yeah.
that's a great advice, Tom. Thanks. Okay, so now that you're a funded trader, I wish you obviously best of luck, and hopefully the first check will arrive soon.
Yeah, I hope so
Yeah.
too.
And guys, if you're not familiar or just got into Traderpool, check us out, traderpool.com. We also have the Discord. You can join there and ask questions and be involved with great community that just continue to grow. And hopefully you will be the next interview. Thanks so much, Tom. I appreciate it.
Thank you too. I appreciate it
Take
too.
care.
Thank you.